Hey, yo, buenos dias, party people. It's your boy Nico. Today I am back. Another magnificently epic episode coming at you. I want to know why you want to be a multifamily investor. I'm not asking to sound deep and crazy and get all into your business. I'm just asking because this business is tough. And unless you know exactly what you're doing, it probably won't be worth it, depending on your circumstances, depending on your resources. When I got started, I thought I would be rich within a year or so. I figured that if I was owning a giant apartment building, one, let's say maybe two, I would be locking in some serious passive income and walk away from my job. But that didn't happen. When I first started my journey, I was super pumped. I was all about learning about multifamily real estate, understanding that you can buy a building by using other people's money through syndications. And that's not 100% false, nor is it 100% true. But there's so many nuances that go into it that I did not know from the beginning. And today, it's my goal to help you clarify why you are interested in multifamily real estate so that you can consider whether or not you should be investing at all or whether you should be an active investor or a passive investor. Let's get into it. So, I have been in this game for over 5 years now. I have closed on 5 deals. One of them went full cycle, 194 units that went full cycle with a team that I was a part of, that I learned from, and that I am grateful for. None of the deals that I have closed on are in my local market of New York. They're all abroad. The majority of my deals and everything that I focus on now for is in Florida, Central Florida specifically. And the first deal that I did, the 194 unit property, which sounds incredible and gigantic, and we went full cycle on within 20 months, was in Columbus, Ohio. I have put together teams. I manage the teams. I asset manage the properties, and I raise money. I put teams together to raise money. I deal with many investors. I have systems, I have processes. I've been doing this for 5 years, 7 days a week, nonstop, and I am still not financially free. Not even close. As a matter of fact, I don't get any passive income or very little. I get very little passive income. And the reason for that is because I don't have capital or money invested to be earning a return. Most of the money that I made has come from acquisition fees, and those don't come often, and they're not really sufficient to replace any income, and they're not guaranteed. So you have to be careful. If you're thinking about getting into this game, yes, you can own apartment buildings. I want to be positive. You can absolutely own apartment buildings, but it is another job. And that's important to know. If you're coming into this without putting in your capital to work for you and earn a return on your capital, you're going to be working for that money. You're going to be putting in sweat equity. You're going to be putting in time, and you need to put in a lot of effort to start earning some capital. So if your properties surpass your preferred return, or if you're doing a JV and you have returns that you can partake in, then you can begin earning passive income. Otherwise, you're not earning passive income, but it is active income, and that's cool too. That's where I'm at. So I have not taken any asset management fees either on any of my properties. And if you don't know what an asset management fee is, well, an asset management fee is income that goes to the asset management team or the asset manager. And it's typically based on a percentage of the gross collected rents. I have it set on my underwriting model for 2%. So I am set to receive 2% of the gross collected rents monthly. So let's take some quick math here. Let's imagine that the property was earning $100,000 a year in gross collected rents. Let's do some quick math here. Let's say that the property is earning $10,000 a month in gross collected rents. The asset management fee of 2% of that would be $200 a month. Now, not bad, but not great. So you have to be realistic here. You're not going to replace income with an asset management fee of $200 a month. Now let's take it a step further. Let's say you had a team and you're not the only asset manager. Maybe you're only collecting 10%. Let's be optimistic here. Maybe you're collecting 50% of that asset management fee, which is kind of unrealistic if you have a team. So let's say the asset management fee now is only $100 a month. Okay. So if every deal is earning $10,000 a month and you're getting $100 a month in your asset management fee, you're going to need a ton of deals to replace any income. You can supplement as well from acquisition fees. So let's now analyze an acquisition fee. If you have an acquisition of $1 million, you typically set the acquisition fee for 2% or so. So if your acquisition fee is 2% and the purchase price is $1 million, you are set to receive $2,000 at acquisition. That is awesome. Now, $2,000 is not going to replace your income. It can help supplement some things, but remember, you have so many costs involved with maintaining a multifamily business that you're likely not going to be able to survive off acquisition fees and asset management fees. Now, again, another point to note with the acquisition fee. If you are getting involved with a team of people, you're going to be splitting up that acquisition fee likely, unless for some reason you do everything, which is not likely at all. And in that case, you might get $500 for your acquisition fee on $1 million acquisition. Not great. Again, you have to think of acquisition fees and asset management fees of covering the cost of doing business. I have a lot of different services and systems and softwares that I need to pay for on the back end that people don't realize. Aside from the time, energy, and sweat equity that I put into the deal, I pay for a lot of services, systems, and softwares, okay, just to keep the business going. So again, let me backtrack a little bit. When I first got involved in multifamily, when I first heard about syndications, I was like, this is it. This is my ticket. I am so pumped. I'm so stoked. I'm going to do this. Only 50 people in the whole world know about this. And I just found the secret to success. It's not the case. That doesn't mean that I don't love real estate, because I do absolutely 100% love and believe in multifamily real estate as a long-term vehicle for wealth preservation and wealth creation, but most importantly, wealth preservation and wealth growth. Okay. It is very challenging to start from zero to become super wealthy. There are so many people out there that have done it. So I don't want to say it's not possible. I just want to be realistic with what you're getting into. Now let's talk some real numbers here. So one of the first deals I did, I thought was going to cash flow like crazy, like we were going to beat our preferred return. So if you don't know about a preferred return, here's a quick breakdown. When you offer an investment opportunity to limited partners, if you're doing a syndication, you typically offer a preferred return. So that preferred return could be 5, 6, 7, 8%. Now, if you surpass that 5, 6, 7, or 8% return that you're giving to your investors, you can then, as the general partner, start partaking in some of those returns. So we never really surpassed our preferred return on any of our deals. We hit it on some, but we never surpassed it. So surpassing the preferred return was the only way that I was going to see some money on my end, aside from the capital that I had already invested. So yes, you can invest capital to, number one, preserve your capital, and number two, grow it and earn a return on it, number three. You can do that. But if you don't have capital, like some of the deals that I got involved with, I didn't have capital to invest, or much capital. So that meant that the majority of my income was coming from either the acquisition fee, which is not real income, not steady, not stable, and very low, or beating the preferred return. Because again, I told you I did not take, and I don't take, any asset management fees. Moving forward, I will. So acquisition fee, beating a preferred return, very challenging, especially in a crazy market that we've seen over the past couple of years. Just be aware that this is not necessarily that easy. And what happened over the past few years? Well, expenses increased, rent growth slowed down significantly, and investor expectations didn't change just because the economy did. On top of that, buyers were super skeptical to come in and pay a premium anymore for the past couple of years, which reduced the potential to sell a property, which also reduced the buyer appetite, and increased or inflated cap rates. And that's the part that people don't tell you about. But I stayed in and I stayed involved and I'm still in and I'm aggressively seeking to buy more deals. Why? Well, if buyer sentiment has really backed down, if buyers have pulled out of the market, if sellers are now finally coming to grips with the fact that they cannot get those inflated prices that they were asking prior, that means we're buying at a discount today. And that's epic. Yes, there were months and there still are times that I thought about walking away and just quitting and giving up, but I don't quit because today is actually the best buying opportunity that we have seen in at least 3 years. So, multifamily real estate is not fast money, it's not automatic, and it's definitely not passive in the beginning unless you are contributing your capital to be invested and earn a passive return on. Otherwise, it's active money, active income. And if you're cool with that, like I am, then stay with me because this is the path to long term wealth. If you're willing to put in years of work with little to show for it at first, you will be fruitful. It will all pay off in the end. So, again, I want you to think, why do you want to be involved in multifamily real estate? Because here's the truth, most of you listening are going to spend the next 10 to 20 years working a job you don't really like, hoping for raises, worrying about layoffs. Multifamily might not solve that problem tomorrow, but if you begin today as a side hustle, actively and or passively, and if you build it right, you could own something that pays you forever. And that's the difference. Owning real estate, owning an investment vehicle, a business that will pay you a return is the difference between manually and actively doing work that you can only do for so long without either burning out or, let's be real, dying. However, if you pass away and you have ownership of a multifamily asset or a business, which multifamily is a business, it is something that will pay you as long as you own it for and it is managed properly. In your retirement, if you're slowing down mentally, if you're getting older, you can begin to either sell off those assets and have your heirs inherit the return, or you can begin to dish them off to your heirs and let them take over operations, although I advise against that. Now, let me be clear in case I wasn't clear enough before. If you're looking for a job, being an active multifamily investor is definitely for you. But if you're looking for true passive income, you need to have capital to invest. And in most cases, you should be a limited partner, a passive investor, if you have tons of capital, because you're probably a high paid, high income earning professional that doesn't have the time to actually be proficient as an active investor. I have to lay it out. And that's where you invest your money into someone else's deal and let them do the work. Just understand the risk. Do your homework and make sure you trust the operator that you are investing with. Being an active investor in this business is not passive at all. It's a lot of work. It can be a grind for years before it pays off, just like me. Yes, there's some income here and there, but it's not enough to replace a W 2. I got to be honest with you. Unless maybe you're living in your parents' basement, you have no other real bills, you don't have a family, then in that case, go all in and please reach out to me. I would advise you to even skip college, reach out to me. Let me get you started on a program or a path to help you become an active multifamily investor starting from zero. I would love that. And for me, though, it's simple. I don't want to rely on one job to support my family. So I want control over my time in the future. And I want to build something that outlives me. So think about your reason. I want you to write it down. I want you to be honest with yourself. Can you handle doing this for 3, 5, 10 years before it really even pays off? If the answer is yes, then let's get to work. But if it's not, think about what your resources are. Do you have enough money, enough capital to invest passively? And if not, and if you're kind of serious about it or just want to get your toes wet, then you could begin learning and start your education today about passive investing or even active investing. But you have to start your education before you dive in and buy anything. Please don't get crazy. Don't buy anything without being fully educated. I can help you get educated. Again, my course is nearly ready, but either way, you can go to my website, smallactscommunities.com today, and you can get many resources for free, like my broker credibility kit and so many other things. So just go to my website, click on that, and make sure you sign up for my newsletter. And if you're serious about getting started and don't want to make the same mistakes that I'd made, just make sure that you either reach out to me, DM me. I can get on a call with you now for free. It is not going to be free forever. Like I keep saying, please reach out to me now. I will help you get your foot in the door with brokers, investors. I will help you begin your underwriting journey and learn how to analyze properties properly. And I will leave you with this today. So, what is your real why? Not your fantasy, not your social media answer. The one that keeps you moving when nothing's working. I want you to think about it. I want you to write it down, get clear, get your axe, start chopping away. And thank you for listening. And I'll catch you guys on the next episode. Love you. All right, and that's a wrap, Small Axe community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.